Let's talk Twitter and other tech news with Katie Roof, senior writer and video host at TechCrunch. Katie, good to see you. Thanks for joining us.
Thanks, Michelle.
Katie, let's start off with Twitter earnings, and the big takeaway there is that monthly active users have declined. There were 305 million for the fourth quarter, down from 307 million in the previous quarter. So Twitter losing 2 million users. To put that number in perspective, Facebook has 1.6 billion users. Shares were down on the news. Katie, how big of a concern is this?
Well, investors are concerned that the stock has ticked down about 3% in after-hours trading, and that's after the stock has been falling a lot in the past few months. It's trading at less than $15 a share. So investors are concerned about Twitter right now. They just haven't been able to grow their service. They have over 300 million monthly active users, which is a lot of people, but they're no Facebook, which is at 1.5 billion. So it just doesn't seem like they're ever going to be close to that, and investors are realizing that and downplaying the service.
Well, Kate, Twitter has been trying to reinvigorate interest. It's expanded the character limit to 10,000 from 140. Twitter also announcing that it would adjust how its timelines can work. Like you said, investors aren't happy. The stock is down around 68% for the year. Kate, is Twitter on the road to becoming MySpace? Is it headed towards irrelevance?
Well, I hope not, because journalists like myself love it. But outside of journalism and tech, not a lot of people are using it. So I don't know that it's quite on the path for MySpace just yet, but it's definitely not growing. And it, as you were saying earlier, it's actually even shrinking. The algorithm Twitter, which you were just referencing, which they just formally announced today, upset a lot of Twitter users who are used to using it as a real-time news feed. But instead, now you can see tweets that Twitter selected for you that they say are the most popular tweets, but they did say you can opt out of that, much to the relief to a lot of users like myself.
It seems that Twitter is ruffling a lot of feathers. Users weren't very happy with the 10,000 character increase either. What is Twitter doing wrong here?
Yeah, I think they've just been trying to change too much, and they've just had a lot of management changes. They recently got rid of 4 of their top vice presidents, and they've gone through, I guess, 7 product heads over the past few years. So they keep changing course, and instead of just sticking with what they're doing, and they keep trying to try different things and see what works best. But really their biggest issue has been, they've said it's too complicated for a lot of non-users. Jack said today, he reiterated on the earnings call, that the @ sign and the hashtags confuse some people that aren't used to Twitter, and so they're working on making it easier for people who are new to Twitter. So.
Kate, let's take this bigger picture. Twitter is continuing to lose money. It lost 90 million in the fourth quarter. Losses have narrowed somewhat. It shows no signs of turning a profit. But is this perhaps an indicator of a bigger issue in the app space? We have these apps with huge valuations that are not monetizing. Tumblr is another example, acquired for 1.1 billion, still not delivering any kind of return. Kate, are we in a tech app bubble?
Well, there's a lot of bubble talk here in Silicon Valley. The problem is that venture capitalists have been valuing these companies differently than public market investors. So you've seen struggled companies go public and find that Wall Street doesn't like what they're doing. Profitability wasn't important here in the past few years, but VCs are starting to realize that if they want their companies to grow up and become big, successful public tech companies, that they have to at least consider that. It's really not just about profitability, but unit economics in general. It's okay if you're reinvesting in growth, but if you're losing money per transaction, that's probably not a good thing. Companies like Facebook were eventually able to figure it out. It kind of depends on what the service is, but commerce in particular, those apps are the ones that I see struggling the most, because all these on-demand companies really require a lot of capital to stay in business.
Well, yeah, profitability is what investors want at the end of the day. Let's talk a little bit about Yahoo Tumblr, one of those examples that was perhaps not a good strategic decision executed by Marissa Mayer. Yahoo is in trouble. And there's talk now that Verizon, AOL may be interested in buying the company. Why would this deal make any sense?
That's right, and Verizon actually is a parent company of TechCrunch where I work, and I did see the reports on that. While I can't confirm that, AOL could tie up with Yahoo. They have some overlap in their businesses, and the idea would be that they could combine efforts and make the most of what's left of Yahoo. But Yahoo really has been struggling for quite some time. Marissa Mayer was brought on board in 2012 to try to change things, but really their stock value had been tied to Alibaba, which they had a significant stake in. And once they've reduced their stake in Alibaba after the IPO, there's really not much left that's exciting about Yahoo.
All right, Kate, we're going to have to leave it there. Thank you so much, Kate Roof, senior writer at TechCrunch.